and welcome to our very first show. We call it Molotsky on Money. What is this show all about? The clues are in the title. We'll be discussing money, specifically investment strategies, taxes, estate planning, insurance, and many other topics, all of it designed to help you and your family improve your overall financial picture. The Molotsky part of our title comes from our panel. Their name is Molotsky. What a coincidence. Each week we'll have Stan Molotsky, president and founder of the SHN Financial Group, as well as Lee Molotsky, vice president of the SHN Financial Group. Stay tuned because we have valuable information on each show that we hope everyone can benefit from. And I must say, Stan and Lee, we took hours and hours to develop this title, correct?
It was a lot of thought, a lot of thought.
Let's talk about what you do, what your firm does, what this show is going to be all about, and how it can help people. Stan, you've been around since 1958. That was yesterday, wasn't it?
About a day before yesterday.
Okay.
Yes. Things were a little different back then when I started my career in this business. As a quick example, in those days we were thrilled to death to have the volume on the New York Stock Exchange hit 1 million shares. Today, it's a bad day unless we have 3.5 billion shares. So things have changed.
So obviously you've seen so many changes. You probably don't remember half of them, correct?
No.
Okay.
Or do I want to, as a matter of fact.
Lee Molotsky is vice president of SHN Financial Group. We should say you haven't been around since 1958, all right, to set the record straight. You're close though, correct?
I am close.
You were born in the business, is that right?
I was born in the business, that's
okay,
correct.
Yeah. Can I tell the story of when you were born, what happened?
You may do so,
Okay,
sure.
when Lee was born, you know how the doctor slaps you and you cry? Well, when the doctor slapped Lee, he said, how's your financial planning? So, I mean, you were born in the business, correct? What have you seen? Actually, your background is in finance. What have you seen since you've been in the firm, which has been probably, what, 30-some years?
Going on 30 years next year, yep.
Okay. What have you seen in terms of changes and what's happening today?
I think the biggest change I've witnessed is the fact that things happen so much more quickly today than they did before. And access to information is so much more readily available today than it was 30 years ago when I became involved in the business. You're expected to be, connected 24/7. Back then, the internet and www.everything didn't exist, or existed, but people didn't utilize it really. It was just the beginning of the advent of the computer, and the computer age was just coming of age many years ago when I became involved in the business.
All right, I want to make sure our audience understands what your firm does, how you can help, and actually the purpose of this show is really to give people information that they may not necessarily get in other places. So Stan, I want to ask you the philosophy of your firm. When you talk to people and you help many clients as you have over the years, what is your philosophy?
Well, the main part is things, like Lee just mentioned, constantly change. So the idea is to be able to present and make available to our clients and potential clients all the different things that are involved in the world of financial planning. Not only where to put their money, what's the best tax advantage places to have their money, when to take their money from where it is, how to protect themselves with different types of insurance programs, should they consider these things such as reverse mortgages, all these kinds of things we utilize, and then we partner with people that do tax work, CPA entities, national as well as local firms, estate planning attorneys that we work with. We have an on-site attorney that works with us in our firm that works in turn with clients that need specific legal work done. So it's an all-encompassing thing, and we represent the client. We don't represent a particular company. We are a truly independent entity.
All right,
we work for the client, not for a particular firm.
And I want to focus on that. Lee, when you say you're independent, and what Stan mentioned was all of the different services you have. So this is not just somebody calling you and saying, I want 10 shares of a stock. That's not,
No.
I mean, you can do that, correct? But this is more comprehensive than that.
Yeah, and as part of our planning process, sure, certainly somebody can buy 10 shares of whatever stock they want. We make that available, but we make it available only to clients of ours. They can't just come in and say, I'm interested in buying 10 shares of stock. like to become a client. That's not what we do. What we do is soup to nuts, comprehensive A to Z financial planning. And it means something different to every individual out there. Financial planning is really putting your house in order, making sure that all the documentation, your whole plan is in process, so that whatever issues you may have down the road, whatever you may run into, whatever difficulties you may have, are kind of encompassed in this plan. Now, we're not going to address every single issue that you might have, but part of financial planning is planning for what-if issues.
So you might ask a client, how's your will? Do
We
you
won't
have
say
a will?
necessarily how's your will, but
you have a
we
will,
may say-
and how is it? You may want to look at it.
well, we do want to
right,
take a look
okay,
at that.
all right.
Now, again, like Stan said, we're not attorneys, we're not a law firm, but as part of a comprehensive financial plan, it's important to have your will updated and reviewed and current. Otherwise, you could run into one of these walls, financial walls that we spoke of just recently.
We're going to talk in future shows about the SHM-isms, which, by the way, stand for Stanley H. Molotsky. That's another creative thing, how you came up with
Amazing.
all of these things. You told me 25 years ago, pay yourself first. I don't know whether that's an SHM-ism, but talk about great advice. Take it right out of your checking account and put it into whatever investment. And that was probably the most simplest and best advice you ever gave me.
Well, I read it somewhere way back in the day, and it is part of the formula or part of the practice where it's incredible, especially today with the change in all the tax laws, the change in all the things that are happening, the change in what the government will and will not provide. You have to be in a position, especially if you're younger, to make sure that you do pay yourself first. So therefore, that's critical.
All right, I want to know, like, what do most people, or what do a lot of people do wrong? When you sit down with a client or a potential client, obviously you see things, and you could probably pick out in 2 minutes a lot of the things, but what do you see that most people, and either one of you can answer this, what do they do wrong?
I would say one of two things. Either they overreact or they don't react.
They don't have
That's
a,
right. And they either overreact because there's no plan, or they don't react because they have no plan.
well, like Lee
So-
just said, the plan is the critical thing. You must have a plan. You can't just jump in and jump out. You have to have a plan and a basic process to develop that particular plan. Here, the market's strong. No, it's not. It's weak. How do you do? What do you adjust? You can't be adjusting every single day. You have to have a certain allocation for what you're trying to do, and then you have to have a certain risk tolerance that you're working with. And Lee's risk tolerance is a lot different than my risk tolerance, and it's a lot different than your risk tolerance, because he's in a different position in his life than I am and that you are. So, and as that changes, so too it's critical that a person's overall goals and objectives change and modify.
So he's saying you're younger than us. That's what he's
Yes,
trying
he
to
is.
say.
Slightly,
all right?
that would be correct. I
Yeah.
mean, simplistically, it's really, it's a roadmap. I mean, you're not going to go from here to California cross country without a roadmap, or without a Google map, or some kind of plan or a map as to how you're going to get from point A to point B, unless you jump on the plane. But that takes planning also. So in order to plan a trip, you actually have to do some planning. We apply that planning a trip, or planning a 10-day vacation, 14-day vacation, wherever that may be, in conjunction with financial planning. You have to have a plan. You have to use a roadmap, and you have to kind of follow your roadmap, not exactly, but have a plan.
I want to ask you, we're coming up on a break, but before we go, I want to ask you this question. So somebody calls you and says, Lee, the market is up tremendously. My neighbor bought this stock. He made a ton of money. I want to buy it right now. What do you say to that?
May not be part of the plan. I have to sit down and kind of take a look at where you are today along the roadmap. If it fits into your plan, perhaps. If it doesn't, no.
And also, just make sure your neighbor's not giving you a lot of
Bum
stuff.
advice.
How,
Yeah,
how
bum
much
advice.
How much advice did you get over from your neighbor or your plumber
Sure.
or whatever? All right, we have more to talk about here on the show. It's Molotsky on Money. We're here every week at this time discussing a variety of information, all of it financial in nature. And certainly we have more to talk about on the show. With Stan and Lee Molotsky, I'm your host, John DeMasi. We return. More Molotsky on Money right after these words.
Do you know what your risk tolerance is when it comes to your investments? Do you know exactly what you have in your portfolio? The SHM Financial Group have developed a very important program called a financial stress test. It's simple, quick, and can help you in your future financial plans. Contact the SHM Financial Group to schedule it. Offices in Collingswood, Voorhees, and Lakehurst, New Jersey. Call 1-866-MOLOTSKI, 1-866-665-6875.
Welcome back to Molotsky on Money, program that will be here every week at this time. And as we said earlier, we discuss a variety of issues on this show, all of it financial in nature, and all of it designed to help you and your family with your overall financial picture. Stan and Lee Molotsky are here from the SHM Financial Group, providing sound financial insights and strategies since 1958. And Stan, we've been talking, there's been no changes since 1958, correct?
Well, sure. There's been the Phillies have won a World Series.
Two, wait a minute. There's been two since
That's
1958.
right. That's right.
Make sure you get that in there.
That's
Your
true.
children were born.
Children were born. A lot of things.
Grandkids were born.
Grandkids were born. But the momentum in the markets and the different things that have taken place are absolutely mind-boggling in comparison to what was back in the day, so to speak.
Right. It used to be there was insurance people, there were stockbrokers,
correct,
and everybody did one thing, and there was
Exactly.
no overall financial plan,
It
which
didn't.
it evolved into that, and that's what you do today.
Well, it evolved back into actually in the 70s. Some firms started to develop, a mutual fund department that had insurance in connection with it, with the stock brokerage affiliation, and it was the beginning of what was then called the financial planning movement, which was back in the 70s, which seems like yesterday to me because I was very involved in that, and then it's evolved into where it is now. Now you have specialists that are doing specific things, and there's nothing wrong with dealing with a stockbroker if that's what you want. There's nothing wrong with dealing with an insurance agent if that's what you want. What we try and do is encompass all of that into a so-called one-stop shopping, where it's all in our building,
Right.
all people in different dimensions that can help a client do whatever it is they need to do.
So you have insurance people that you work
Correct.
with, you have accountants, attorneys, all of that, and all of that are at your disposal to help clients. Is that basically how it works?
Basically, it's a two-division entity. The SHM Financial Group oversees the fixed guaranteed situations that we present to clients, and Lee is involved in with a few of the rest of us in the money management section under the Molotsky Tax Advisory thing, and Lee will talk about that in a second or two, where it's a fee-based investment advisory entity, and we combine the different things and work for the clients who need different kinds of things.
Bottom line is you're working for the client.
That's the thing.
That's the bottom
We're
line.
totally independent. We do not work for a company. We work for the client. The client compensates us, and that's how we get paid.
All right, Lee, I want to talk about something, and I know you have a lot of tools to help clients and kind of help direct them so they can see why you're doing what you're doing. One of the things you have is a financial stress test.
Correct.
And I want to talk about that because I know it's pretty simple, but it's also pretty important for people to take this test. Talk about that.
Sure. It's not as simple as it may initially appear to be, but we talk about red ball, green ball, and sometimes we talk about yellow ball. But red ball, green ball, it's not stop and go, it's really your risk tolerance. So we look at the shape of a ball, and inside the ball, we look at the color of the ball. If you're completely and utterly risk averse, you want nothing to do with the color red. If you're completely and utterly market oriented, market savvy, very involved with risk, and not concerned at all with risk, you want 100% of a red ball. So most people don't fit at one end or the other. They're not 100%.
They're
They're
kind
not
of
a
in the
red
middle,
ball,
right?
green ball.
They're in the
They're
middle?
somewhere in between.
Okay,
And
well, we're going to put both of you to work here because we're going to show this. We actually have what you're talking about here, and we're going to show everybody what this is. So, Stan or Lee, either one of you want to kind of explain, because I hear you say red ball, green ball, now we see them, but what does this all mean for people?
Well, you take the upper left-hand corner or right-hand corner, depending on how you're looking at the screen, but the all red is all risk. And then underneath of it is all green, which is all safe. And at some point in your life, you're going to be from one ball to the other, and you're going to modify and change what you're doing based on the amount of risk you're comfortable with taking at any particular point in your life. So when we sit down with a client, we go over the amount of risk he and his wife, or she and her husband, want to take at this particular time, if they're married. If not, it's just the individual. And then we modify it, because we try and meet with a client at least every 6 months to just go over what's going on in their particular set of circumstances, and then to modify that risk tolerance, because the world keeps changing and their circumstances keep changing. And they want to make sure that their risk tolerance is comparable to what they're equipped to handle at this particular time.
So part of the stress test is really a modification assessment. The stress test initially includes talking about the red ball, green ball, but also includes a questionnaire that we go through with each individual client or potential client. Then during the year, we sit down and review and modify their risk assessment according to red ball, green ball. So as Stan said earlier, if the market has gone up and grown in value, your red ball, green ball may be out of balance. It's kind of like getting your car realigned or rebalanced, whatever the verbiage is, to make sure that your tires are balanced and the car is running smoothly. Well, without a rebalancing of your portfolio, according to your risk assessment, you're going to be out of balance.
All right, I saw reds and greens, all right, and you guys understand it. You do this every day. Again, I'm looking at this and I'm trying to make sense of it. The red, when you're all red, that means you're
all in.
You're
All
risking.
in at risk. All
You're
at risk. All at risk.
So 50-50 is half red, half green.
Right.
Okay. Well, who's half red? Who's half green? Who's 100%? How do you determine that?
We don't. I don't want to answer it. We don't determine that.
The client.
The client determines
We-
that.
The client determines where he or she is most comfortable. What's interesting is when the husband is, 80% green and 20% at risk, red, and then the wife says, I want 20% safe and 80% at risk, then you have some issues to discuss. So when there's an imbalance within the family, we have an interesting discussion, but it's really the client who is red ball, green ball sensitive.
And it changes. That's the important thing. The risk tolerance changes based on their age, based on the cash flow, based on their health, based on what they're trying to do with the money. That's why it's critical to meet with the client at least every 6 months, just to make sure we're still all on the same page and we're still going in the same direction.
So the financial stress test determines how much red, how much green you have. Is that pretty much
Exactly
how
right.
that works?
Exactly.
And you mean to tell me that husbands and wives disagree, Lee? I've never heard of that.
You know what's fascinating to me, how things have changed within the business. You go back to the beginning, so to speak, of my career, and when you sat down with a couple and you talked about these kinds of things, it was always the husband that wanted to be more at risk. Now it's totally different, with more women working and with more women in the workplace and more women understanding a lot more of what's going on in the world financially. They tend to want to be more at risk than what their husbands do as they get more mature.
You also see, one of my judgments is that as the market tends to move, has tended to move up somewhat recently, you see people wanting to not miss the party, so to speak, and they tend to have forgotten sometimes how risk-oriented the market really is. So in 2009, very few people, when we sat down and did red ball, green ball, wanted to be in the market because they were scared to death. Now the market's come back and people are much more open to much more red ball than they were before.
All right, more to talk about here on the show. It's Molotsky on Money. Every week at this time, we discuss a variety of financial issues with Stan and Lee Molotsky from the SHM Financial Group. And I'm your host, John DeBassi, coming back with more of our program. We'll do that right after these words. Stay with us.
Throughout our working years, we accumulate as many retirement nest eggs as possible. The problem is, not much attention is given to the color of the eggs. Do you know how much of your assets should be allocated to each color? At our firm, we have a system that helps you allocate your retirement nest eggs correctly. We have a simple way for you to group your retirement assets into red, yellow, and green money. Give us a call today and we will help you sort and label your retirement nest eggs, giving you a clear picture of the color of your retirement.
Welcome back to Molotsky on Money. Each week on this show, a lot of information for you in terms of your financial picture. As we've said earlier on the show, it's going to be about investments, estate planning, insurance, taxes. I mean, basically, Stan, we're going to have people on the show that are experts in the specific field.
Exactly. We're going to
And
have
we'll talk about this on future shows.
Right. We're going to have estate planning attorneys. We're going to have tax people. We're going to have money managers who manage mutual funds and ETFs. We're going to bring on people that specialize in specific things as guests from time to time. Yes.
And this is all part of, Lee, the full service that you talked about. You have basically a lot of people at your disposal who can help clients. Is that pretty much how it
Yes.
works?
Exactly.
They're associates of ours that do specific things. They specialize in certain areas.
And like I said, we'll have estate planning attorneys, and we're going to actually do a show on reverse mortgages, which a lot of people are asking about these days, so we're going to do that and more. But what we have right now for you is a segment that we'll have on each show. And these are email questions that have come in, and we are going to put the email address for Stan and Lee Molotsky where you can email your questions to them at any time, and perhaps, you never know, we might have your question here on the show. Here's our first question on this show. Harris is in Bryn Mawr, Pennsylvania, and he says, I've been watching a few stocks for weeks, hoping for a pullback to buy, but they haven't pulled back. Should I just buy them at their present elevated price?
Well, it comes back to what Lee and I were talking about a few minutes ago. You must have some kind of a plan. I mean, you may have more than what your plan calls for in the market, so to speak. So therefore, you shouldn't necessarily be adding to that particular plan. But what's been happening the first quarter of the year, the market has been exceptionally strong, and everybody says, maybe I'm missing the boat, I have to rush in. That's not the case. If you have a plan and you stick to your plan and you take advantage of certain things when and if the market should react in a negative way, and your plan is such that you're under allocated for the stock market, then you should be adding if you have a plan. You can't just give a question like that, or give an answer to a question like that.
That
to the
may actually be the absolute wrong time to buy that particular
Exactly.
stock.
Well, that's my question, and this is, I'm sure it's difficult. It's easy for you, you're in the business, but for people, it's difficult, and obviously Harris's question alluded to that difficulty. You know, when do I sell? The market's going up, I'm making money, I might make more. But if I sell, I might not make that money. Do you follow like his logic? And that's how I would think too.
Well, the logic comes back to your plan. How much money, percentage-wise, do you want to have at risk? How much of that money should be in stock-related things that'll fluctuate? And when that percentage gets out of line to your risk tolerance, then you have to pull back. If it's under that amount, then you want to take advantage of whatever corrections may occur to add to that particular position. You must have some sort of a plan. Otherwise, you're throwing darts. And as a quick rule of thumb, I always use the adage that if you're looking to what you should be doing with your overall investments, and you turn around and you say to yourself, okay, I have these different securities, the market is at whatever level it is, should I be adding more to it? Then you ask yourself, well, if you had cash, would you be buying the specific things you already own? And if the answer is no, then the answer is, well, why should you be holding on to those things? So there's always opportunities. It's just a matter coming back to what is your risk tolerance and how much risk can you and your spouse and your family afford based on where you are economically, where you are age-wise, where you are health-wise. All of that is part of the process.
All right, Lee, you wanted to add to that?
Yeah, part of the question that we would ask Harris
Yes.
before we answered Harris with an answer, a proper answer, is whether or not these monies were in his IRA or not in his IRA, and what percentage of his assets. Again, if he were a client of ours, we would see in front of us where that stock position fit into his overall plan and his strategy, and then we can answer the question. But a point-blank question specifically about buying or selling that particular stock would be a good guess, without really thinking.
Based on what you've told me so far, I don't know how people do this on their own. It seems fairly complicated because when to buy, when to sell, when to get out, when to put in, when, and how much to do this and how much to do that. You obviously have a plan for them and you have a whole system.
Well,
But
you do
how do
what
you do this on your own? I
You
mean-
do what you do 7 days a week.
Yes, correct.
We do what we do 6.5, 7 days a week.
Well-
Whoever is, if you're managing your own money, you need to be on top of it 5 days a week while the market's open, research over the weekend, come to work Monday morning, maybe not come to the office, but do your work at wherever you trade your positions at. So
Okay.
We have
this is
some.
a,
There's a-
sorry,
I'm saying,
go ahead.
we have some clients that we work with and guide them, but they do a lot of their own things. And
But
they're-
you're still there to guide them.
Well, we're there.
Yes, right.
We're there to give them information. It may be tax information through our affiliates. It may be legal information through our affiliates, and it may be specific things pertaining to different market strategies that we guide them with. But they're basically doing the things pretty much on their own, and then
Okay.
they pay us for the privilege of working with them.
Okay.
we can help them coach their team if they wish.
Okay, we have another question here, and I believe this is from Sheila. Do we have Sheila's question? Yes, Sheila in Haddonfield, New Jersey. Sheila says, "Hi, Stan and Lee." Obviously, she must be a client or she knows you. "I've been lucky enough to grab hold of some nice winners this year and have, for the most part, ridden them to nice gains. My question is, when do I sell? I've ridden a lot of stocks up and down in recent years and don't want to give up all of my gains." Similar question, I guess, to the other question.
Well, again, it comes back to having that plan. And she has a plan in place, and we've talked about this. And the idea is that once they hit a particular level, if they drop a certain amount, you have to get out. I mean, based on her risk tolerance and what she's trying to accomplish, she has to have an exit strategy. In today's marketplace and in today's economic environment, it is absolutely critical that no matter what you're in, what kinds of things you're in, you must have some form of an exit strategy.
Okay, we'll keep that in mind. We'll keep remembering that. Okay, we have another question here, another email question, and again, feel free to email Stan and Lee with your questions, and hopefully someday we'll have your question here on the show. This is Martin in Lakewood, New Jersey. Martin says, "If I take Social Security benefits at 62, will I move up to full benefits when I reach full retirement age at 66?
The answer to that question, Martin, is no. You will not move up unless you go back to work and earn more money than you did before you were working, so that the average can then be pulled up so that you could make more. But once you have established that number, that is your number.
So if you want the full benefits, don't take them at 62, is that correct?
Well, that is correct. You don't take them at 66 or 67 based on your age. The longer you wait, the more you get. And then it's the old strategy or theory of, do I take it early and utilize that money, or am I better off waiting? And the answer to that, everybody's situation is different. And we've partnered with an entity that in turn will provide what is that actually called?
Called
It's a
Social Security maximization.
Yeah, we're going to do actually a segment on this show and future shows on that whole thing.
It's a great thing. It's a numerical series that they put together, and it shows you if you wait how much more you would get, and if you don't wait and take the money, where if you put that money in certain things, if it earned whatever it is, how much better off you may or may not be. It's excellent.
Again, it's a plan.
It's a plan.
Instead of a quick answer, yeah. let me
Yeah,
think.
go ahead, buy that, sell
Yeah,
that.
yeah.
Real quickly, is Social Security enough today for people to retire on?
Unfortunately, in many cases, it has to be, because many people don't have enough money and haven't planned properly in advance of their retirement. The answer is no, but in many cases, unfortunately, it is. It has to be.
And with that, we put the wraps on our first edition of Molotsky on Money. For Stan and Lee Molotsky, I'm your host, John DeMasi. Thanks for watching. We'll talk to you next time right here on Molotsky on Money.
Since 1958, the SHM Financial Group has been providing sound financial insights and strategies for people just like you. Founded by Stan Molotsky, the SHM Financial Group believes in safety, security, and preservation of principal. For more information on how the SHM Financial Group can help you, contact them at 1-866-MOLOTSKY. That's 1-866-665-6875, or visit them at shmfinancial.com.